Hello fellow chartists, welcome to my YouTube channel. I am the Chartist, and today we had an incredible green day in the stock market, especially for the S&P 500. Holy moly, so many breakouts after breakouts, elevator up, stairways, wait a minute, what is it, escalator up, elevator down, but no elevators because we haven't reached our floor just yet, or have we? Okay, so obviously it's not the day to be bearish. It was very bullish. Very easy day to trade if you was unbiased, that is. But it was a very hard day for you if you was a bear. But we're gonna talk more about that. But it's the flow sentiment bearish. 79% in the puts, 21% in the calls. Filtered for 200K premiums or above. And you see at the end of the day, getting a lot of people buying puts again. Okay, despite the bullish price action, getting a lot of puts. All right, this one's 6.6 million in premium, 423 strike price, April 14th. These ones are pretty aggressive. March 21 expiration dates. All right, million in the money though, 450 strike price. Okay, puts. This one April 14. Okay, so yeah, so some people might think this is useless information. I like to see what big money is doing. You know, why are they bearish? Why are they bullish? I don't trade just simply based off of this information. There's a lot of context to it. Okay, that you got to look into. Yeah, you got to combine it with price action technical analysis. Okay, so all this price action, bullish price action, a lot of people got squeezed. Let's put it that way. I'm looking at the dark pool. I don't usually show you guys the dark pool, but I always show the dark pool orders to my Discord members. They always get to see 4.2 billion in premium at the 439.46 level. All right, so at that level, this is all institution. All right, dark pools institution, what their activity. Okay, so based on the price action going up, it looks like they bought in 4.2 billion worth around that level, guys. Okay, now Discord members, you guys got to see that, and hopefully you guys benefited from it. But interesting information on the flows today. But like always, guys, price action comes first. And with that being said, let's go to my Discord real quick. All right, now, beautiful price action today, okay? The plan today, all right, I'm going to read the whole thing. Yesterday, SPY tried to break out its core downtrend line from January. Okay, that's from the triangle pattern that I always talk to you guys about. My target of 433.5 was 438 to 437, then 440, 441. And we hit 440 to 441 target yesterday. My target got hit yesterday, and then we dropped from there. And I put today, back test mode today. The plan today, support equals where we broke out from on the triangle pattern, around 436.5 to 437. We was bouncing around that level in pre-market. Okay, now I put if holds 440 to 441 was my first price target. 443 to 443.5 was my second price target. Okay, we failed here, meaning if we drop below the 436.5, that would have been a false breakout and another dip to more support levels to the downside. Okay, so the only way I would have been bearish, like I told you guys in yesterday's video, watch for the back test of the triangle pattern and only be bearish if we drop below the triangle pattern, if we drop back within it. That's a false breakout. We never ever got the false breakout today. Okay, so if you were unbiased and followed the price action and followed the charts, you should have, in theory, made money. Okay, the only way you didn't make money today is if you was biased. You know, you was biased to the downside, you was being stubborn, or you didn't listen to the chartist, or a combination of both. Because you're looking at this 15-minute chart here, there was nothing. Look, it's just upside, it just went up all day, one direction. Very easy day to trade. It opened right here, choppy at first, okay, eventually broke through. You see that orange line? That's the triangle pattern. Okay, because it was below it in pre-market, broke through and came back. It came to our resistance, 440 to 441. That's these two white lines. That was our resistance zone. And you see the long wick? That told us, the long wick told us, hey, there's selling pressure. Boom. Next candle. You see the wicks on the downside of this candle? You see this red candle, hammer candle, but it's a wick. This one has a wick. That shows, and this one has a wick. Also bounce off the breakout level. All right, breakout here, treat it like a support. Back test, but this time going to the upside. Okay, this told us right here, buying pressure. So it went up to resistance, try to test it again. We saw some selling pressure. And as you see with these red candles, you see the wicks on the bottom end of it. That tells us there's buying pressure. So what does that mean? Basing. And the fact that SPY was basing just below the resistance zone, that's a bearish price. That's a bullish price action. When you see price basing just below resistance, it tells us it doesn't have enough strength to break through it yet, but it is building strength. There's no selling pressure. We did not see any bearish engulfing candles here. No reason to be bearish. It did not take any. It did not take out any support level. No support level was lost today. Remember, I tell you the best time to be bearish is when a support level is lost. There was no support level lost today. It just based and then eventually broke above, and then 441 was my resistance level. Broke above that. We got a confirmed close here. Treated like support on this candle. No selling pressure. I updated the Discord group throughout the day in real time. I told you guys, no selling pressure. We broke. We want to see if it holds that support or if it bases above, which it did. Look at it, it's basing. Wicks on the up on the top end of the candle, wicks on the bottom end of the candle. It's basing. No bearish engulfing candle, and it just continued going upwards. There was no reason to be bearish today. You know, if you follow the price action like I always preach here on this channel, you should have made money today. I hope you made money today, but you know, we're humans. We're gonna follow our bias. You know, our emotions can get the best of us sometimes. Okay, so look at this. This is the daily chart. Very bullish. You see all that green candle. Let me move some lines so it look a little better. You can look at it better. Okay, those lines are my support and resistance levels for the intraday. Very important for me. Okay, so yesterday we broke out of that triangle pattern. Okay, today I said we gotta watch a follow through. All right, you can see on this green candle we got a small little tiny wick right there. It bounced off a 38.2 retracement level around 417. Okay, I got my fib levels at the high of January down to the low of February 24th. It recaptured that 38.2 retracement level and broke out of the triangle pattern. And you see this red line right here? This is our multi-year trend line since the November 2020. Okay, yesterday was an extremely bullish day. It recaptured and broke out some critical levels. Today it showed follow through, guys. I told you guys, if it shows follow through, possibly back in the buy the dip market. As long as this level hold 437, as long as we're above 437, bulls are in control right now, guys. If we fall back below 437, back into this triangle pattern, that's a false breakout, and that's when I would turn bearish. Okay, I think we will get a pullback next week, but I think it's going to be a buy the dip type of pullback. I don't think it's going to be a big pullback, like a rug pull. Of course, that's always subject to change based on the price action because the charters can't see the future, but this is just what I'm thinking because we got the breakout, we got the follow through. You know, the price action is bullish, so if I'm staying unbiased here, this is a sign that the bottom is in, you know, and the downtrend is over, the correction is over. I talked about the expanded Elliott wave correction yesterday, that it finished that correction. Okay, watch yesterday's video if you want to check it out again. All right. So, you know, as long as you're being unbiased, I'm just thinking we are back in a buy the dip bull market. I don't know what else to say right now, except that for me to be bearish, like I said, we have to lose 437. Okay, last year, every time we lost the 50-day moving average and recaptured, it was very bullish, and SPY went up to new all-time highs. 2022, though, it wasn't that much luck with the 50-day moving average. However, we recaptured that today. 50-day moving average was around 442.2 when it closed. We closed above that. Next big test is the 50% retracement level at 445.3, and it's also around where the 200-day moving average is. So 445 to 446 zone. That is the next big test. We're there in the after hours right now, but it doesn't count. But that is the next big test for bulls next week. If we recapture that 200-day moving average, SPY is once again officially trading above all moving averages. Okay? This bullish price action does align with seasonality. I mentioned seasonality not too long ago, and I got some negative reactions from some of the viewers. It is what it is, and I got no hate for you guys. with all the war and all the negative stuff going on, honestly I could see why people are bearish. But at the same time, we gotta follow the price action, because that's the most important thing. That's the number one indicator. But you're looking at the seasonality. Now, we don't trade based on seasonality. Well, I just track it, and it shows us what the tendencies are of the market based on certain time frames or seasonal periods. Okay, it doesn't guarantee that the market is gonna behave like this the same way, but it's a tendency based on the last 20 years of data. And according to this data, second half of March begins a new uptrend. So the next few weeks or month should be buy the dip market to the upside, at least into early May. Okay, that's based on seasonality. All right, I mentioned yesterday about the Elliott wave. I posted an image here. Okay, we should be on the third wave. If we are starting a new trend with the breakout of the triangle pattern, recapturing of the 50-day moving average, we just need to take out the 200-day moving average, recapture that, and that's a good sign that we are in this wave 3 to the upside. Okay, possibly retest all-time highs, but we will see. I don't want to jump the gun. We still have to play it level by level. For next week, we need to recapture that 200-day moving average, which is currently at 446. So above 446, I don't see any more reason why anyone would be bearish in this market. Okay, so if you're saying we need to recapture that 200-day moving average first, I get it. Okay, because that's still technically we are below it. Okay, that's going to be a big obstacle for bulls next week. But if we recapture it, if the breakout of the triangle pattern was not enough and the follow through today was not enough, if we recapture that 200-day moving average, I don't see any more reason why you would be bearish. Okay, but again, that's up to you. This is just my opinion, and this is what my plans are that I'm going to do. Okay, guys? But as you can see with my Discord day in and day out, my accuracy is not that bad, guys. I'm not trying to be, cocky or anything, but it's the truth. And look at the VIX. I've been telling you guys all week, the VIX is looking bearish, guys. And look, it came right down to this support level. That is a 78.6 retracement level. Also, a trend support of this support line right here. Okay, so yeah, so below 23.74, that's very bearish for the VIX. Okay, that's a breakdown of this trend line. Okay, a bearish VIX is a bullish SPY. For the VIX to be bullish again, the first thing it needs to do is bounce off of this support level and maybe try to recapture a level it lost previously, like starting with the 50-day moving average. It's currently at 26.57, so VIX needs to get back above that level to look bullish again. Okay, and then there's a 61.8 retracement level at 26.76. It needs to recapture that. As you can see, it just lost these levels and just kept losing the level. Back tested this one as a resistance, and then today it lost a 50-day there, and then today it tested that 50-day as a resistance. It just kept on dropping to the next support level to level. Okay, so if you couldn't tell if the SPY was bullish or not based on this breakout of the triangle pattern, look at the VIX. Okay, so now the VIX has a big test. If it holds this level, this could be a sign that the SPY drops back down. Okay, maybe it's a buy the dip drop, but could be a good scalp play if you're a bear. Okay, I'm just saying. But keep an eye on the VIX, keep an eye on the SPY and the charts, and stay objective to it. All right, because that's all I'm trying to do. Just staying objective to the charts and get others to do the same so they can be profitable. Speaking of breakouts, ever since QQQ got the breakout a couple days ago, it's been on a tear. Look at that. All right, breakout from the bull flag. It was bull flagging, broke out. Yesterday it showed follow through. Today it came and tested the next resistance level. This white line right here is a 23.6 retracement level that I got on the fib level from the March 2020 low all the way up here to the November high. Okay, 23.6 retracement level at 351.69. Also where the 50-day moving average is, that orange line right there. Okay, so big test for the QQQ coming up next week. All right, if it bases around this level or just below that level, that's bullish. If it breaks through and treats it like a support and then holds, that's bullish. Okay, what bears want to see is a strong rejection like a nice bodied candle or a bearish engulfing candle, something like that. A strong rejection from this resistance, and that will be a sign of more downside. If not, if this is recaptured, guys, The next level above is around 367, 368 zone. That's where the 200-day moving average is. And obviously, if we recapture that level, QQQ is back to trading above all moving average. Okay? Dow Jones finally broke out of this green bull flag. All right? So obviously, for next week, we want to see follow through 346.25, which also happens to be the 50% retracement level. So a very critical level for two reasons at that level. And if it holds, that's very bullish. The breakout holds. Downtrend is probably over. Next price target up is 351.71 at the 61.8 retracement level. Below 346.25 is when I would turn bearish. IWM also in breakout level, breakout mode. Okay, see this green trend line started way back in November, got a touch here in January. We broke out of it for the first time today. For next week, we need to see follow through. 205 is support and must hold level. Below 205, it's a false breakout. Okay, as long as it hold, I'm bullish to the upside. All right, 209, 212 is the next resistance. Tesla recaptured the multi-year trend line today. Okay, Tesla has been climbing up the ladder one step at a time ever since it broke out of this bull flag. Recaptured the 200-day and then tested the multi-year trend line and then recaptured it today. All right, and now testing the 50-day moving average. Well, the 50-day moving average is at 903.87. It actually closed above that, so it recaptured that as well. And it looks like the next one is the 38.2 retracement level at 908.55. Above that puts the 941 in play. I got that as the neckline for this inverse head and shoulder pattern. You see these arrows? All right, head, left shoulder, right shoulder, inverse. Neckline's at 941. That's the next resistance. If we break above that, that's very bullish. And 972, then 1036 are in play. Okay, guys? Apple, look at that beautiful bull flag. Broke right, bounced off of that bull flag so beautifully, the support of the bull flag. Today, it recaptured the 20-day moving average. All right? So, the 20-day moving average currently at 161.3 must hold. And the 50-day moving average is now in play, currently around 166.5-ish. All right? And if that clears, the resistance of the bull flag is in play, currently around 170. And if we get the breakout from there, there's no reason to be bearish. Okay, guys? Now, if we get a strong rejection from there, like I said earlier, like we see a bearish engulfing candle sign, that's a sign of more downside, and we're probably heading back down to the support of this bull flag. Okay? And Apple is a heavy-weighted stock in the SPY and QQQ, so it could move the market. Okay? Definitely worth watching. Bitcoin is currently trading above all moving average except for the 200-day moving average. Okay? Still trading within this triangle pattern. I still would like to see a breakout, so it needs to get above 45K for me to be bullish on it. But as of right now, it's just chopping still. Support is around 40K. Below that, test down here around 35.7K. And if it drops below that, that's a breakdown of this triangle pattern. Very bearish, and the next pause around 28.7K. All right, but if it breaks above 45K, it recaptures the multi-year trend line and breaks out of this triangle pattern. All right, guys. So that's all I have for you guys today. I hope you guys had a great week. All right. Thank you guys for all your support. Thank you guys for listening, and I'll see you all soon.